Okay, folks, it's December 27th. We're now moving on to another trade strategy. I have money espresso. Let's go ahead and get started. What other ticker symbol do we want to cover today?
So this time I'm looking at Jets, which is our ETF for airline.
Okay. Jets. Go bullish on it. Is that what you're thinking?
Yeah.
Yeah, it's down at like 50% of its previous high, right?
hmm
How much higher you think it's going to go? Probably 28, 29,
Yeah, maybe 29,
29,
30.
somewhere.
And if we say like if we talk about going long out of the year, then it should be
I'm
hitting
not a
somewhere around 30.
big fan of jets. Like, well, I'll give you my personal opinion. Like, this is dependent on how the airlines will pick up, right? Pretty much. Is that what it is?
Yeah.
Okay. So on this one, actually, I would consider doing, if you want to like just play a long term play and forget about it,
hmm
kind of thing. I would do like
Yeah, the only reason I'm thinking is because we know vaccine is out, everyone is taking it, and I'm thinking like even like if we talk about offices, even offices are saying like they are opening back maybe in September or for sure by end of the year. So once everything is open, we will be seeing a lot of travel, and I think then we can see some good upside in jet.
what if we did a simple strategy like just selling a put at 22.
Yeah, we can do that.
If it goes below 22, you're going to be forced to buy at 22.
hmm
Otherwise, you will collect a nice return, right? Like,
hmm
so you will collect around $4.30
hmm
on 22, right?
Yeah.
So obviously on a portfolio margin, it's 496,
hmm
but on a regular account, it'll be close to like 600, 700, and you collect 430. And on a cash account, it'll be 430 divided by 1770, the ROI.
hmm
So on the cash account, it's like a guaranteed, like not a guaranteed but a fixed return actually, of if it stays above, right, 430 divided by 1770, a 25% return. On a margin account, it's probably going to be close to 50%,
Yeah.
or actually more than 50% return. So
hmm
it's like just putting this trade in and forgetting it, pretty much.
So it will be somewhere around like not 50, somewhere around 90%, 95%.
Yeah, this one is close to 90%. You can
Yeah.
see it already right here. Investing 496 to make 430, or getting forced to buy it at 22
22.
in 390 days, unless people stop traveling by planes in 390 days. Worst case scenario, you're technically buying this for approximately 22 minus 4, right? So that's like about 18 bucks. So the question you should be asking, is this a good level to buy right here? 18 bucks right here.
Yeah. And we are
in
talking about
in a
after a
in a
year.
year from now, a
Yeah.
year from now. Yeah, I like this. On this one, I just like the fact that we are doing selling premium, because this is not doing the supernova cycles, right?
hmm
Because even if it goes up, like how far up can it go? Otherwise it would have taken off by now, pretty much.
hmm
See, it's not got that momentum curve back up. Unless you think it will like just skyrocket before, above its previous high.
hmm Yeah. Yeah. I think selling premium seems good.
It's more logical. And if you want to do more bullish on jets,
hmm
like, my other suggestion to you would be going further out. See, but this is like locking your money. It's like you close your eyes and you never see your money, pretty
hmm
much. Right? Let's see how much delta. Okay, not bad. Let's do pretty much Let's go ahead and do extrinsic. Yep, this is the best, buddy. 22. So look at
Okay.
this. How does this trade look like a year, 2 years from now? Right. So the question you should be asking, is it worth it? Like if I made $6, right?
Mm-hmm.
This trade. So 22 minus 6 is 16, right?
Yeah.
So my cost basis is 16 there, right? Pretty
Mm-hmm.
much. So either 2 years from now, I'm forced to buy at $16,
Mm-hmm.
or I will collect $600 on my trade, right? And obviously, my ROI is way above 100%. On this one, on a cash account, it is, tell you, 600 divided by 1600, 37.5% return. And on a margin account, it will be close to around 60% return. So that means annually you're making about 30%.
Yeah, sounds good.
Feels like a no-brainer, right?
Mm-hmm.
It's like you just park your money and forget about it
And
for,
will there be any costs on margins which we should be careful of?
no, just worst case you have to be prepared that if they want you to get assigned sooner, you will be forced to buy it and then you can close it sooner.
Hmm.
But if they force you to buy it, that means that they're giving you all the premium in advance,
Okay.
which is very least likely to happen.
Yeah.
You just have to make sure that we have to put in the $1,600
Hmm.
when you need it,
Hmm.
when you need it. That's there's no cost or anything for this, other than you will be forced to buy it if it goes
Hmm.
below $16. I think 16 is pretty low, right? Think about it for a
Yeah.
second here on the chart. Right here, buddy. Look at
Yeah.
this. Actually, coincidentally, this is like a good support line right here,
Yeah.
right? It has been bouncing off of that through COVID. Look at that. After COVID, it just kind of bounce here, bounce until we see another major COVID kind of situation and airline just stop business, right?
Yeah. Yeah. This trade sounds good. I've written it down.
But this is something where you don't get to experience or anything over time. You just kind of keep it and forget it,
Forget
kind
it.
of
Yeah.
thing, right?
Or maybe like, yeah, but okay.
You
Yeah.
can come back a year later and let's say you want to take your money out, you can close it a little bit earlier, but it's you won't monetize too much if you close early.
Yeah. Yeah. I need to give at least it like, if even I'm going 390 days out, at least I need to give it to at least 300 days or maybe
Yeah.
350.
Yeah, I think this one is, if I look at it, let me see anything closer than that, right? So we did, let's do 173 days. This is not bad too, right? 22 minus $2.80, so 20,
Mm-hmm.
right? If you're super bullish, then you can go closer. If you're not super bullish, then you can just do the 390 and hold it. Done, finished,
Mm.
right?
Yeah. Okay.
Okay. Let's move on.